evening, a very good afternoon to all friends. I'm Sanjeev Singhal, Central Council member and Chairman Auditing and Assurance Standard Board. I welcome you all to the 117th program of AASB for this council year. Friends, today's topic is key consideration in audit of healthcare sector. As we all know that there are certain peculiarities in the healthcare sector. So as an auditor, how do you take care of them while doing your audit, while issuing your audit opinion? So today we have two very eminent speakers who are well experienced in this sector, C. Ruchi Maheshwari and C. Lavnish Agarwal, who will take you through this key consideration in the audit of healthcare sector. And we have two esteemed moderators, C. A. Prachi Gupta and C. A. Nitin Gupta, who will be moderating this session. I thank both these speakers, Lavnish and Ruchi, as well as the two moderators, Prachi and Nitin, for taking out time for the benefit of our members. I'm sure that all the participants will be extremely benefited by the deliberations. Thank you. And with this, may I now invite Nitin to take it forward.
Hi, thank you, sir. I would like to thank Mr. Sanjeev Kumar Singhal ji, Chairman of AASB of ICIF, and Mr. Vishal Doshi ji, Vice Chairman AASB in absentia, to give me this opportunity to moderate this seminar. Today, we have organized a seminar on the topic of audit of healthcare sector. And this is a very peculiar topic, as sir said, and it requires additional consideration with respect to compliances and other aspects of it. So we have two eminent speakers speaking on, who will be deliberating on this topic. First, we have Mr. Lavnish Agarwal. Mr. Lavnish is the experienced manager with Assurance Tube of Perion. He has over 10 years experience in conducting statutory audits. Approximately 5 years of the professional experience has been with the Big Four accounting firms in performing of audit under US GAAP and Indian GAAP. He is skilled in statutory audits, internal audits, over financial reporting and tax audits as well. He has worked in multiple industries, including healthcare, hospitality, retail consumer goods, real estate, diversified manufacturing, automobile technology, and others. During his tenure at Big Four, he has worked for clients based in India and out of the US West region. Also, we have with us CA Ruchi Maheshwari, and I'd like to call upon I'd like to call upon my co-moderator to introduce her to us.
Good afternoon, everyone. I would like to thank Mr. Nitin for handing over, and it's an absolute pleasure to co-moderate the session with him today. A warm welcome to CA Sanjeev Kumar Singhal, sir, Chairperson of AASB of ICAI, CA Vishal Doshi, sir, in absentia, Vice Chairperson of AASB of ICAI, our eminent speakers, and one and all present here. The board has organized quite a few sessions on key considerations to be taken care of while conducting the audit of a particular area. Today, we will be exploring the key considerations to be taken care of in the healthcare sector, as we know that the sector is rising tremendously. In today's webinar, we will get a closer look of related facts and other key aspects. I would now like to introduce C. Ruchi Maheshwari. Ruchi is a chartered accountant with over 25 years of extensive corporate experience in the domain of banking and financial sector with Indian and MNC organizations. She has held senior leadership roles at American Express and Royal Bank of Scotland and expertises in the field of corporate governance, encompassing areas of internal controls, Sarbanes-Oxley compliance, risk assessment process, and thematic audits. She has always had a flair of learning and exploring new advancements and worked in implementation of robotics with her prior organization. She moved out of her corporate profile in 2019 to turn into an entrepreneur and set up her risk consultancy. She is also working with a tech partner to create a chat GPT tool which would support companies for their ESG reporting and strategy building. As a strategic partner to a digital platform, she has taken up an initiative to spread financial learning to help support people around their personal financial well being. I will now yield the floor to CA Ruchi and request CA Lavnish to stay tuned with us. Over to you, Ms. Ruchi.
Thanks, Prachi. Thanks for the introduction. And really, I would like to thank AASB for organizing such events and also giving us opportunity to speak on the subject. Practical experience used or learned over the years definitely helps leverage and train our new chartered accountants or people who are getting into this field. This is a great opportunity that ASB offers, and I think the institute overall is taking this aspect. And I would like to thank all our council members, and especially Mr. Sanjeev Singhal, for such great, events and webinars being organized. So not taking too much time and getting into the session. Today's topic is really a great topic, and especially the area that we are covering. So can I just request Lavnish to kind of put across the slides? Lavnish, could you do that? Okay. So as we know, we're going to talk about healthcare sector, and the session today is going to be a combined session between Lavnish and me. And we'll just take you through the various aspects, and we will walk you through any questions that you have. You can definitely put down as part of your chat box, and it will be picked up by the moderators, and we'll take all your questions at the end of the session. So, please hold on with your thoughts, and we'll be happy to guide you. One big thing that I'd like to mention is that we all know that the healthcare sector is one of the critical sectors. And it is becoming one of the largest sectors, both in terms of the revenue and the employment. And especially, I guess each one of us have seen how this has grown, especially post-COVID, especially the impact that has had on people's life over the years. And the need and the requirement has grown over the years. As we all know, this sector works in terms of two categories, right? We have the governmental, public hospitals and the healthcare segment, and we also have the private hospitals or the private segment. And we'll talk about all of this. But here, I'd just like to give you a glimpse of what this sector really holds from an India perspective, how it has grown over the years, and what's the projected growth over the years. The reason why this is important for us to know is because as chartered accountants, this not only tells the level of scope that it gives us, but it also gives us or tells us the kind of responsibility that we have on ourselves when we kind of audit or give our opinion on any of the financials of such sectors. So, and also just to mention, like as our moderator Nitin mentioned during the session, we'll not only talk about the financial aspects, but we'll also talk about some peculiar compliance aspects, which as an auditor, you may have to take care of while you audit any of the healthcare segment companies. It could be a hospital, it could be a dental, kind of thing. It could be uh, a support function, or it could be a shop in shop kind of a model, because there are a lot of private and startup areas that have actually come into healthcare. It could be diagnostic. So this is, we not talk about a specific segment within healthcare today, but we talk about the overall areas that you have to do. And any specific questions, as we said, we'll definitely be happy to take them. If I have to talk about the market size, if I talk about the hospital industry itself, it was valued at around $108 billion in 2024, and we're expecting a CAGR growth of 10.64, which in the next 5-6 years is the growth that we're projecting around. If I see the kind of expenditure on healthcare that's been happening, it's been growing. And again, we stood at around 2.1% of the GDP in FY23. While that number was quite low, if I have to talk years back. In terms of medical tourism, we are seeing India emerging as one of the bigger countries where people really come over, not only for tourism, but also for their medical aid. The kind of services that they get here, the kind of expertise on the doctor support that they have is growing. We are aiming to a double-digit billion level, a double-digit billion level dollar growth, which is happening in India in the next 2 to 5 years. That's what we are expecting. And I'm sure as CAs, you know that even in the union budget or the budget every year has more allocation that happens towards the healthcare segment. And one of the biggest things that we see is around Ayushman Bharat or the PMJ schemes that happen, right? We've allocated the scope of inclusion of people is increasing. As we all know, is this time we had Anganwadi included, we had even LGBTQ also included within the scheme. So this scheme has been actually enhancing and growing over the years. This is just a high level view of what really the scope and size this is. Again, the allocations is not only related to hospitals, but it also relates to vaccination drives. It's also included for medical college aids that the hospital wants to do, because if you have to have more healthcare providers, definitely you need more doctors to be there, and hence you need more medical colleges. So this is what the scope is. So if I go further, what I'm going to talk about is what are really the common issues that we normally face, right? Every segment or sector that we audit normally has some inherent issues or concerns that happen. Like, especially if I have to talk of healthcare, the biggest concern in healthcare is normally excess billing, right? Or excess revenue that's being shown by companies. And that's a bigger thing, because if we understand hospitals as an example, hospitals, and I'm just taking a step back to kind of give you an idea. So let me take an example of a private hospital as an example. And that private hospital may be giving you services of outpatient department, IPD, OPD, specialization into as an example, cancer specialization, or maybe heart specialization, various other branches that are there. A lot of these patients are actually which are billed to the government. So you have CGHS screens, you have insurance patients that are going and coming. So what happens is the inherent challenge that we all see is we see that there are overbillings that are done by to the patients, so that the hospital does not really suffer any losses. So if as an hospital they are spending 100 rupees as an example, we may see that there is a probability that they may bill for 110, so that they don't miss out on any of those gaps. And this is what we've seen as issues that have come even in media. So as an auditor, I think why we're bringing out these concerns to you is just to highlight that these are some of the common practices. And again, when I say these are common practices, but it's not that these are prevalent everywhere. It will depend on the kind of structure you are in, what are the things, but these are definitely ideas or areas where you may want to keep in mind, right? You may want to think about, as an auditor, are these areas covered within the scope of your audit planning? And that's why we're just highlighting these are some of those things that need to be kind of taken care of. So as I said, overbilling to patients, or even if there is a government healthcare scheme and the government is actually paying each area. So, for example, EWS, every private hospital has to have around 20 to 25% of the patients to be treated which are under the BPL scheme, right, which is below poverty line scheme. But are they really actually giving that kind of a service to the below poverty line, or are they creating fake patients and just taking money from the government example? So this could be a possibility, right? Or they have arrangements with doctors which have a pass back, or they have cash receipts from patients which may not be accounted for, as an example. So these are some of those cases where we kind of see that there are issues. And again, common issues, and I'm sure when you as a person, as an individual, not as an auditor, you may also have personally seen such cases, or example, if you would go for a treatment, you could be seeing that there could be possibility of an insurance claim being falsely raised by the hospital and just sharing across the money. So these are just possibilities, and these are areas of concerns that we've highlighted based on informations and reports and past precedences of cases. But again, it's not that every organization would have the same. These are just areas where you may want to have an eye upon when you are doing your audits, or when you're scoping your audits, or you're kind of seeing the balance sheets or the P&Ls. maybe these could be your trigger points to include the kind of coverage within those areas. So just a highlighting area. And again, one more big thing that I would like to say is there are a lot of bundled services in today's time that hospitals or health providers give you, right? And those bundled services could also have, an inflated cost. The margins are something that you may want to look around. So these are just a high level thing, but yes, while you're having your discussions, while you're doing your conversations, inspections of the data that you have completed, you've gathered from the hospital, keep an eye on these aspects so that these kind of get covered and you don't miss out on such possible chances of frauds or misappropriations of funds being done by a healthcare organization. So this is just a high level. What I'm going to talk next is about how we're going to talk through on terms of the flow of the session today. The way we drafted the, Lavnish, can we go to the next slide, please? Today's session is practically divided into four large segments. The first segment being what understanding what the legal structure of a healthcare organization can be, what their financials look like, and what each and every parameter of the financial statement talk to us, whether it's the balance sheet or the P&L. The next segment is about what are the audit risks that we see in a healthcare, and how do we kind of balance and take remedial action around it. The segment three, which is the most key aspect of today's conversation, is the audit approach. What kind of an audit approach should we take them? What are the steps do you kind of take during those plannings? Some bit of nitty-gritties around those. The fourth segment being the practical issues that we face while auditing a healthcare entity. So that I think should encompass and give you a holistic view of your approach on audit for a healthcare company or an organization. Starting with the first segment related to understanding the legal structure. As I said at the start of the main highlight that we're taking in today's conversation is around hospitals. Again, other healthcare providers would also fall within the same ambit. They'll not be too far off. And hence, we've just kept them in the similar context. As we said, we could have public limited companies or listed hospitals, publicly owned hospitals, as an example. And I'm sure in every state that you are, you will see all of those. But I guess Lavnish and I come from Delhi NCR, so we've taken the names as an example: AIMS, Sri Kangaram, or Satyajam Hospital. These are more like the publicly owned or have a contribution from the government on this. Non-profit organizations or charitable hospitals are some of those hospitals also where they are held by trusts, and that's the other category of hospitals that you can have. Or the other third category that we normally see is the private hospitals, which is, as an example, Apollo that you see across, or Medanta, Artemis, and various other hospitals that you may see within your own states and locations that you are in. What kind of services are being provided? Again, large variety of services being provided at hospitals. It could be your medical, general surgeon surgery supports that are there, surgical, medical, normal OPD, just inpatient, outpatient kind of departmental things. You could have smaller clinics, because I'm sure all of these private hospitals also have smaller clinics that are being opened. Or you could say, smaller startups have come with a clinical kind of a format in this hospital space. They haven't really started as hospitals, but they've started as clinics, which are supporting even in factories and all of those. So, for example, HCL clinics, they don't have separate clinics, but they have tie up with corporate segments, and they run their clinics in all of those corporate factories wherever their corporate clients are based. So that's a clinical setup that you may have. You may have psychiatric, various other things, even blood banks, organ donations, and all of those areas also kind of come part of the same segment. If I have to talk about financial statements, I think we all know the financial statements. We all know assets, liabilities, right? The liability side of a balance sheet for a hospital, and we've just taken a synopsis of Apollo Hospital as an example. What we would normally see is, definitely the equity, the capital side, which is the shareholders fund, all of that. Then your current liabilities, non-current liabilities is what you would see here. If I have to talk what really that means, if you can go to the next slide, it will actually show you in terms of the shareholder equity. As we all know, it's nothing but the capital in thing put in by the promoters or the public or the trustee or whatever that we have in. And this is actually the most critical part of it, because they are the deciders in the decision that happens. In today's time, we have a lot of PE funds also really putting in money. I actually support for consulting a healthcare service provider, which is a startup, and actually they are totally funded by PE funds. So we have a lot of medico PE funds in today's time who are just ready to put in their funds, not only from a growth perspective or their contribution to the society, but also an impact that they're making to the society at large. Because a lot of funds have impact funds also. I'm sure you understand that impact fund is nothing but a fund which a lot of PEs or venture capitalists want to put in, wherein they may not want the return as much, but they may want to see the actual impact in the society. So, for example, you could have impact funds or contributions made by people for improvement in the health of people. So for example, diagnostics, you have a lot of contribution, because people, if we go a decade earlier, none of the people really used to get into testing their doing the diagnostic tests, and those diagnostic tests were really important, because end of the day that helped me diagnose my health issues in advance. So for example, to identify my BP issues, my diabetic issues, that's something which is important. So what I mean to say is that really shows that how many people have really contributed into the company, and it also shows us the kind of growth trajectory that people might want to come in, right? Are they really running into just for the revenue or the growth, or they're really interested into the impact and the social side of the healthcare business? The other bigger aspect that we see is borrowings, because as we know that hospitals or any of the healthcares have a lot of investment that goes into equipments, right? To set up a whole surgery section, or even in terms of really getting machines, whether it is for surgery or dialysis, as an example, or any of the healthcare stuff. Because especially now, as you know, a lot of support is being happening on robotics, right? A lot of your machines have robotic inclination, which means they have a increased cost, right? And hence the borrowings, you can see a larger borrowings happening in the books of accounts of healthcare companies. Uh, in terms of the provisions and liabilities, yes, or the government grants that are being given, the payables that are there to the MSME vendors, the kind of lease or the hospital charges that are there. So these are some of the aspects that we see on the liability side of a balance sheet of it. From an asset side, yes, the general category of asset side is about fixed assets, which is tangible, intangible assets that we may have. The current assets, non-current assets is what we have on our balance sheet. But what do they really mean, right? And if I have to explain, as we all know that machinery, plants, and equipment is one of the biggest aspect for any of the hospitals, right? Because to have an hospital, you may need to have medical equipments, the ventilators, ambulances. And what's critical here is to understand the kind of impairment that's done or the depreciation charges that you've done in terms of the way that you've accounted for these things. That's a critical part that needs to be kept in mind. If we've collaborated or maybe taken up any of a smaller business within this hospital, as an example, because we are seeing consolidation happening in the healthcare segment. So the smaller players are merging with the larger players. And when we buy out, there's a lot of goodwill or various other things that get merged within the company. And those things are very critical to understand, that are they really being accounted for? The value that we paid for the purchase, is that really going in the right manner? In what we see on the tangibles, that intangibles that we see in the books, whether it is in terms of the
Progress.
kind of a what to say, where the hospital has a lot of revenue coming from the government side, your trade receivables could be very, very high. I have seen up to like 30-40% of the revenue being standing as trade receivables. And that trade receivable recovery takes a much longer time. And we all know that this kind of an issue has been seen and has been raised at multiple forums with the government also. And whether it is the government or any of the sectors. So as I said, CGHS or ESI are some of the players that actually tie up with hospitals to kind of provide support to their employees, right? And that kind of a recoverability is something that may take some more time. It's not that it's not recoverable, but it takes a longer time. So that risk is there. So, and hence their reconciliation and confirmation is a very key parameter. Their aging is a very key parameter, and the collection process that is supposed to be taken care or to be understood in detail while you're auditing the healthcare companies. Again, the dues from TPAs is also another concern. So basically, the hospital may be providing, and in today's time, as we know, each one of us are actually, you know, taking medical care, but it's a lot of it is dependent on the insurance policies that we've driven. So as a client, I may get the services and I may, get a discharge from the hospital. But if I have to see from a hospital perspective, the hospital may have a lot of dues coming or pending from the insurance, the recoverability from the insurance. Their receivables are quite high. The other bigger aspect is around the inventories, because the hospitals have to maintain a lot of the inventory balance, right? Whether it is for pharmacy, whether it is for medical equipment, whether it is for the consumables that are used, whether it is your syringes, blood tubings, IV sets, multiple kind of things that are available that needs to be in stock. Their usage, timely usage, the kind of expiry or damage that's happening, that may kind of be increasing your consumable cost, which could have a negative impact on your financial. And that could be a key thing that you have to look at, that how is it valued? What is the kind of accounting policy that's being used at that point in time? These are very critical aspects that need to be kept in mind. So that's a view of the balance sheet. Now moving on to the P&L, which is another key aspect for us. As we all know, in the P&L, you would always see revenue from operations and other operating revenues, right? Or other incomes that you may have. And I'm going to talk about what kind of other incomes could be there. So as we said, the revenue from operations is the normal operations that the hospital does, which is basically your OPD billings that happen for the patients that visit the doctors. Your IPD, which is your inpatient departments, basically all the patients that get admitted to the hospital for any of the facilities or the services that they take, whether it is a surgery that they're undergoing, or whether it is any kind of a procedure that they have to get, whether it is an intensive care unit support that they do, the room rent, all of that kind of gets clubbed as part of your inpatient departmental billing. A couple of people may just do their OPD or may buy pharmacy, medicals, medicines and all of that. That is a normal part of your operations aspects, right? There are a couple of things, as we mentioned, which is basically these. So in a hospital, you would have something which is called the necessities, or which are requirements as part of it, and some are, uh, what to say, it's like beautification and various other kind of things. So, for example, a dental treatment, because I have a problem in my teeth, that's the treatment that I'm doing. But if I'm getting some kind of a teeth straightening kind of a treatment, or maybe cleaning of my teeth kind of a treatment, then that comes within the beauty care, or maybe a plastic surgery. So these are treatments which are other than the basic treatment, but definitely offered by hospitals and needs to be kind of taken care. And I'm sure we all know that there are a lot of other kind of departments every hospital has, whether it is gynecology, whether it is dermatology, oncology, cardiology, and they have their own kind of contributions in the revenue that's being generated. You have transplants in today's time that are happening in hospitals. That is also there. And sometimes some hospitals also kind of earn money or earn revenue through the kind of you could have seen like the parking space tickets that are being given, or in hospital, as I normally say in my conversations, that these are bundled services, right? Where you have something like an or physiotherapy treatment being given to you as part of your medical surgery. So if you've got a knee replacement as an example, then the orthopedic surgeon would charge his surgery charges, but along with that, you may have a physiotherapy attached to it. So there could be two departments billing a same person in inpatient, and that's how they would earn revenue. The other costs so these are part of the revenues that we talked about. The other revenues that they earn is about, as we said, if I have
I guess there's a power outage. Meanwhile, I can take up the rest of the components. Meanwhile, Ruchi joins in. So, revenue from operations was one sector. The other component of the P&L is basically the cost components. So, when we talk about the cost components, the major chunk which goes into the cost part is basically the payouts which goes out to the doctors. There could be multiple type of arrangements which we need to carefully evaluate, which is basically it could be a revenue sharing model or a minimum guarantee model, or there could be multiple other arrangements as well. The next is cost of medicines and consumables, which may be through OPD, IPD, that could be through ICUs, and consumables in terms of syringes and all those costs. The third one is the staffing cost, which is basically the nursing cost that needs to be checked. Fourth is outside investigations in case if there are any kind of tests that are being recommended. So hospitals usually pay to those centers in case if they could not have their own machines or something. So they usually collaborate with the outside clinics which have those kind of machines. So that is another arrangement which could be found out. Then there are equipment hire charges in case if equipment has been taken on rent rather than procuring it because of the cost constraints. The last one is a referral cost for acquiring business. So although this is not exhaustive, but again, these are a couple of examples which are there in which one can find in the P&L of the P&L of the entity. Ruchi, in case if you're there, probably you can continue. Otherwise, I can take it
Yeah,
ahead.
I'm sorry, I just got dropped off because of a network issue. Thanks,
No
thanks,
worries.
Manish, for chipping in.
Sure.
Yeah. So I guess we covered this line. We just move ahead. And I think now I had to hand it over back to Lavneesh only because I think he's going to take it over. So back to you.
Thank you, Ruchi. Thank you. I know I could thank the institute and Mr. Sanjeev Kumar Singhal sir and Mr. Shal Doshi sir both. So I really like to first of all express my sincere thanks note on to for providing this opportunity to be a speaker and to the ESP board as well. So now I'll be taking it ahead for the segment two. Basically, we'll be talking about audit risk over here in the healthcare sector, and then we'll be talking about the audit approach. So let's start with the first of all, with the risk assessment, how we do the risk assessment of the healthcare sector, and how we then proceed ahead with the audit. So usually the risk assessment is divided into the five parts. I have tried to capture it that way. So the first one is relevant factors affecting our risk assessment and plan response. So why do we assess risk? The reason for assessment of risk is because initially when we assess the risk, it will ultimately determine how extensive we need to perform the audit because of the limited time available for the audit, right? So when we talk about the risk factors, these could be two type of risk factors. One could be external, there could be internal. External comprises of usually the government policies, laws and regulation, the market, how market behaves in terms of providing the staffing and all those scenarios. When we and parallelly on internal side, when we talk about the internal factors, they are basically the entity's internal control environment, how complex the accounts are, how much the management is pressurized in terms of inflating the revenue or deflating the revenue or managing the P&L, probably the prior year misstatements that have happened in the past, and so on. So this is the first factor that needs to be looked at. The second is size and composition of the account. So while doing the risk assessment, the second thing what we need to focus upon as an auditor is how big an account is, or how big an FLSI is, financial statement line item is, that needs to be focused upon. The third is volume of activity processed through the account. So after we have identified the financial statement line item, we need to see what is the voluminous nature of the activity that is going through that account. Are there limited amount of transactions that are over there? In that case, our audit approach would be altogether different. But in case if they are voluminous, like in healthcare sector, where you might find an X-ray happening or a consultation happening on a daily basis on n number of times with a very nominal amount of transaction. So in that case, what usually happens is we need to change our audit approach to sampling, or maybe use analytics. So again, coming back to the main topic, volume of activity is something that needs to be taken care of before determining how extensive we need to do the auditing. The next is nature of the account and disclosure. Since this is a specific industry, what we're talking about over here is healthcare industry, so there could be some additional disclosures that may be required with respect to that account. So that is also necessary. The last one and not the least, measurement uncertainty. So when we talk about the healthcare sector, there are a lot of estimates involved with majority of the FLSIs, which are really crucial to understand because ultimately they will impact our profits or losses. Estimates could be depreciation, again is an estimate when we talk about healthcare sector, is derived revenue, and even the AR is derived by estimates to some extent, which we'll be covering up in the later slide. Now coming to couple of risks that we see along with the financial statement line items, what is the background related to that, and what audit procedures we usually need to perform. So these are basic audit procedures that are required for an risk. Additional procedures could be there, but again that needs to be developed basis the understanding of the entity and then proceeding ahead. So let's talk one by one with respect to what kind of risks we usually see in the healthcare sector and how we can address them. The first one, going concern assessment risk. So going concern is a risk. Reason being, these healthcare sectors or probably the hospitals or the entities are highly leveraged entities, right? So there is a lot of capital infusion, a lot of borrowings that goes into the lot of borrowings that happen because of the heavy infrastructure cost that is required to run these institutes or probably the hospitals, clinics, and all. The equipments that come at a very high, they are very, very costly. right? So highly leveraged balance sheet blocked working capital with long gestation period. Why we are saying that they have a long gestation period? Because to come into the profits, it takes a really good amount of time because of the heavy capital investment. So now talking about how we can address this risk. So there are a couple of audit procedures what we can perform over here is, first of all, identify parameters which indicate going concern risk, like continued losses, negative cash flow from operations, or maybe net current liabilities if they are negative, delay, defaults in salary payments, or external dues and debts. So these are a couple of examples. What we are talking about here is talking about over here. Going concern, assessing the going concern is with respect to whether the entity would be able to sustain in future and would be profitable enough, right? So when we talk about all these factors, whether an entity had been operating in losses in the past, there might be a question in the auditor side whether the entity would be incurring future losses in the future as well, or what is the management's projection in case of how the entity would be coming into the profits. The second is negative cash flow from operations. So uh, apart from operations, there could be other sources of revenue, but operations is the main source of revenue for any entity. So when we are preparing cash flows, we need to specifically see whether the cash flows from operations are positive or negative, whether there is a cash burn happening into the entity, and whether how this needs to be managed. Whether this needs to be infused by the equity again, or probably from the borrowings. This also needs to be checked on the management. Net current liabilities, whether the current liabilities are more than the current assets, whether the entity had been able to pay the salary to the employees, or whether the entity is able to properly fund its external liabilities with respect to debts. The second is obtain mitigation plan from the management, like proposed infusion of equity, support from promoters, parent entity, new credit line approved, debt restructuring, cash flow projections for next 12 months. So to support whether the going concern assessment is hit or not, we need to check first of all the parameters that impact the risk, and then see how management has planned to manage this risk. So whether the management is ready to infuse further capital, or they have any kind of agreements with the external parties, maybe PE funds like which you was talking. So we need to see how management plans to manage this up. The third is applying professional judgment while evaluating the management mitigation plan and conclude accordingly. So management might provide multiple sources of information and supports in terms of justifying that the entity would be able to perform well in future, or how it's gonna sustain. In that scenario, what we need to do is we need to evaluate those supports very critically and see whether the if there are any estimates used, or whether the data or those information provided, they are valid enough to support the management's plan. The second is management override of controls. Again, this is a risk by default. So because the reason is management is always in a unique capacity to override controls and manipulate the books and financial statements to it might be to understate or overstate the books, because management is always in a continuous pressure to either perform better, or there might be high profits. In that case, they might want to defer it to future periods just to avoid taxes. So there could be both ways. So what procedures we can perform over this is, usually we perform the journal entry testing. How we can do that? We can probably test journal entries with specific digits that are appearing into the line items. What we can do is we can use transactions which have unusual descriptions. For example, passed after discussion with auditor, or passed with after discussion with CFO, CEO, and so on. We can see if a transaction is of a non-standard nature. Probably we can see that if a transaction has been posted on a holiday, public holiday, or maybe if it is posted on a day on which usually the transactions usually do not happen. We can scan ledgers for unusual entries, again passed by the management. So how do we determine whether these kind of these kind of audit procedures needs to be performed? It all comes from the understanding of the nature of pressure, or probably the financials that are happening, past year mistakes, prior year mistakes done by the management, or how things could be done. So this comes when we are actually going through the discussions with the management at the inception level. Now coming to the main risk area in the healthcare sector, which is revenue, there is a high probability that it is understated or overstated by the management. And again, it's not necessarily because of a management's assessment. It's because it may be because of the wrong estimates that are used by the management. So again, when we talk about the background, it is always presumed that revenue has some element of fraud, and there can be either overstatement of revenue or understatement of revenue, as the case may be. Talking about the audit procedures, when we talk about audit procedures, first of all, we need to understand all the streams of revenue through which the revenue is flowing into the entity. It could be through OPD, it could be through IPD, pharmacy, investigations, or maybe there could be other sources, other arrangements as well. In case, let's say there is a clinic, they could have a rental income from the clinic. So in case if they have let it out any machinery or something to those clinics, there could be rental charges for that as well. So these are a couple of revenue streams that those are there apart from the OPD, IPDs, and these one, which also needs to be understood. So first of all, to ensure whether the revenue has been booked correctly, first of all, we need to understand whether all the streams of revenue have been properly evaluated and then assessed properly in terms of its recognition. This will give us comfort over the completeness of the revenue. The second is perform test of details using appropriate sampling techniques. Test unbilled booked in the prior year. And so how do we do that? Again, first of all, since as we discussed in the risk assessment approach, we need to understand the kind of line items which are over there in that particular account. In case if the transactions are limited, maybe basis judgment we can do all the testing, or otherwise if there is a voluminous data, and then in that scenario we might need to do sample testing. And now, how do we perform a sample testing? Again, there could be multiple ways of doing a sample testing. It could be we need to stratify the population between different classes of revenue, as we discussed in step one. Then probably take the samples and then test it. We need to also see whether the unbilled revenue have been properly booked into the books or not. In case still there is a large voluminous data that is lying out over there, we can probably perform analytical procedures around it as well, which includes reconciliation of revenue generated with cash collected and credit card collections. Uh, the second is revenue generated per bed day versus comparable period. So usually it happens that the sometimes the kind of revenue for a particular stream might be seasonal. For example, for clinics, OPDs, there might be a high surge in patients after the winter season because of the cold and common fever conditions which usually prevail when the weather changes. So again, we need to see how the revenue was coming in the prior years compared to current year. But again, that would depend upon the kind of stream of revenue what we are talking about. The third is month-on-month occupancy levels versus the revenue book. And the last one is department-wise revenue generation and the cost incurred. So all these steps, analytical procedures, what we are talking about over here is they all relate to that specific revenue stream that is flowing into the entity. So segregation of revenue into the revenue stream is much more important, because that is how you will be able to decide kind of audit procedure that need to be applied to that particular stream. It might not be necessary that a specific procedure is applicable to all. So we have to customize the audit steps basis the requirement. Again, when we talk about revenue includes estimation, how we are using estimation. So what happens in case of an healthcare industry is revenue is usually booked on gross charges. It's like going to a restaurant and ordering things where the price lists are fixed. So whenever a patient visits a hospital, the prices are fixed. For example, consultation fee is fixed, the registration charges are fixed, the X-ray charges are fixed, MRI, and so on. So what happens is, at the first instance, the hospital or probably the entity records the revenue on a gross charge basis. Now, what they do is they segregate the revenue into two parts. If it is an inpatient or if it is an outpatient, then in inpatient, usually you will find the other kind of revenues. For example, there could be ICU charges, there could be X-ray charges, there could be other charges as well. So what happens in case of an inpatient is basically the patient has a tie-up with the insurer company. For example, let's talk about Max Bupa or probably Religare. So usually they take an insurance policy from them and they usually tie up with the hospital, and these insurers have usually a tie up with the hospitals. So the collection percentage rate of the hospitals with these kind of institutes would differ compared to other insurers who are directly not linked with the hospitals. So again, this also needs to be taken care of. I'll talk about this in the audit approach section in more detail. So let's talk about other risk areas over here. So the next is inventory management and verification. So how inventory as a FLSI is prone to risk? So it consists of, first of all, medicines and consumables which have an expiry date. So this is a very critical aspect of auditing, that we see that none of the medicines or probably the consumables or the stock is something that is getting obsolete, because inventory is something which is again of a huge amount or probably a significant line item into the financial statements. So what audit procedures we need to perform around it? First, we need to check aging of inventory and expiry arrangements with the vendor, whether if the consumables or probably the inventory has expired, what are the arrangements, whether that would be replaced by the similar kind of inventory, or whether there would be a refund arrangement. You need to check with that, and with respect to that, we need to perform procedures accordingly. The second one is perform necessary stock counts at year end. Again, depending upon the quantum of the inventory, there might be monthly stock count, internal monthly stock count, or quarterly, or half yearly, or at year end. But as a auditor, in case if you're a recurring auditor, it is always suggested that you observe the management count as well. And at the year end, at the time of audit, we are also conducting our independent inventory count, both for the OPDs, IPDs, and pharmacies separately. Third, separate valuation for IPTs and pharmacy inventory. Now coming to the next line item, which is impairment assessment of PPE. Again, PPE, we discussed initially that it is a very significant line item into the financial statements of any healthcare entity, because all the equipments that are mostly used are very, very expensive. So what are the kind of audit procedures that needs to be performed over there? First of all, we need to assess the cash flow projections given by the management. Second, we need to test the key assumptions which are used by the management, involve external in-house valuation expert, and perform necessary checks. So why do we need to first of all perform impairment assessment of PPE? Again, this is heavily invested industry. There is a huge capital investment, both in terms of property and plant and equipment, as well as building and infrastructure. So that is where the impairment testing is necessary. Reason being, the entity is usually in losses. Impairment testing can be done at the entity level as well, at departmental level as well as at individual asset line item wise as well. So there might be a scenario where one department is operating in profit and one department is operating in losses. So accordingly, we need to develop our audit procedures around it. The third is recovery of trade receivables, confirmations, and reconciliations. So what is the kind of risk that is usually associated with the trade receivables? Initially, we discussed that there could be three kind of trade receivables. First is the government. The second is private pay hospitals. The third one is the second was the insurers, and the third one is the corporates. So the highest risk of delay in payments is from the governments. There would be a high chance or likelihood of non-recoverability from a particular insurer, and in case of when we talk about corporates, there is comparatively less likelihood in terms of the recoverability. So the kind of audit procedures that we can develop around these trade receivables are: first, adequate policy for long gestation or long outstanding trade receivables and ECL model. We need to see whether the company has proper policy around it, how to recognize the provision, or probably how to recognize the bad debts, or probably whether the entity has properly evaluated the use of ECL model over the trade receivables or not. Second, special focus on deductions and reconciliations. The entity has whether, in case if their AR is for, let's say, $100 million for a particular insurer, or so on. So whether the receipts which are coming in are for appropriate amount, or are there any kind of deductions that are being done by that insurer over the same. And in case if there are any kind of deductions, or there are any kind of reconciliations, those should be prepared, and that those should be requested from the management. The third one is special focus on recoverable from ESI, CGSS, and PSUs. Again, governmental agencies as an auditor, you would find there are usual delays in providing the kind of supports in terms of confirmations, or probably the recoveries although they are backed by the government, but again, different kind of struggles may be found by an auditor, and in that scenarios, usually we perform the alternate procedures. Fourth one, practical challenges while performing alternate procedures for not confirming data. So this is another area where we need to see how best we can gain comfort over the particular data in case if there is a challenge in terms of doing the primary substantive procedures, or probably even the alternate procedures, how best you can gain comfort, whether you can check for subsequent receipts, or whether how good the rating of that data AR is. So that all needs can be checked in. The last one, check subsequent realization of outstanding trade receivables. Again, in case if we are falling short of evidences in terms of getting a comfort over the account, probably we can see the subsequent realization for the past years in terms of trade receivables. I like to also relate trade receivables with revenue over here, and probably would like to suggest a couple of audit procedures with respect to them. So usually what happens in case of a healthcare industry is AR and revenue is altogether uh, linked with respect to estimates as well, because whatever revenue has been recognized initially would get into a AR, since like in the real estate industry, there is a high probability that the insurers do not pay the whole of the amount billed to them in the same year. So the recovery percentage usually ranges between 3 to 4 years, but again it depends upon insurer to insurer, and it may vary from a year to 2 years or 3 years from for various insurers, and hence accordingly we had to classify the insurers or probably the AR into specific buckets. We had to stratify the population of the AR as well, and then see how best we can perform audit procedures with respect to that specific ARs. And so is the ECL policy as well. I mean, when we talk about applying ECL model, then also we had to stratify the population into different classes. So again, when we are talking about revenue, we need to stratify them into the streams. We need to properly classify them into various streams. And when we talk about the AR as well, the same approach we apply over there as well. We need to map them into respective buckets, which have similar characteristics. So appropriate account auditing procedures can be applied to them, and accordingly we can gain comfort over the account. Now coming to the segment 3, audit approach. So what is the ideal audit approach? So it is usually similar to any kind of audit that we do. However, we do customize it for the specific sector that we are talking about. So let's talk one by one with respect to the approach that we follow while doing the audit. The first one being, first of all, we need to understand the scope of audit or review engagement. We need to see whether we are doing a statutory audit, whether we are doing a limited review, whether it is a specific review. So we need to first of all understand the scope of the audit and then proceed accordingly. What are the steps covered inside it? The first is client acceptance procedures. We need to ensure that once we send the EL, the client has thoroughly gone through it and understand the kind of procedures that we as an auditor would be going ahead with, and whether we would be issuing an audit report with respect to that procedure or not. The second is ensure independence and ethical requirements. Being an auditor, we are always expected to be independent and always follow the ethical requirements set out by the institute and perform in the best of the integrity. The third one is agree commercials and sign engagement letter. As an auditor, we need to finalize fee at the inception only, and we should not work ideally on a contingent fee basis. Assess the audit requirements. Again, we need to understand the requirements from the client, how we need to perform the audit. The last one, assess the staff requirement, including the experts required. So we need to assess, we need to get into the discussions with the client, we need to see the kind of staffing that would be needed to close the audit. And in case if there is a valuation requirement, or let's say in case if there is a expert requirement for specific region department of the sector, then whether if that is needed, that should also be encompassed in. Second, review internal financial controls and internal audit reports. This is again a very important aspect when we talk about the healthcare industry. So healthcare industry as an industry is dominated by multiple laws and regulations that needs to be adhered to by all these entities, and they have to do all the filings. So as an auditor, we also need to ensure that there is no non-compliance in terms of all the governmental or regulators filing from that hospital or probably from that entity. So what as an auditor can we do is, first of all, we can review the quarterly internal audit reports. We can understand the IFC controls and its results for test of design and test of efficiency. Again, this second point will only give us comfort in terms of the kind of audit procedures that we need to perform. If the processes and controls of the entity is flowing in properly, if there is no deviation, there is no default, there is no non-compliance, in that scenario, definitely for that account, we will be performing less audit procedures. But in case if the account has a lot of deficiencies, there are non-compliances, the control is not operate and the control is not able to operate properly, in that case our audit steps would increase. Third one, evaluate and assess the gaps identified to be included in the scope of coverage and testing. Now, how do we identify the risk? So what we do is understand the entity and its environment. That could be control environment, ELC and other controls, IT system, business of the entity. Understanding and identifying the risk is most crucial because ultimately it would help us determine the kind of audit procedures, audit steps that we need to put in. The second, identify risk, including the risk of materials misstatement and fraud risk. We need to identify the captions that those are all prone to risk. Usually in healthcare sector, what we'll see is apart from management override of controls, revenue and AR is usually carrying a risk of fraud or at least high risk items, and accordingly these need to be put more focused upon. So ideally, whenever we are starting an audit, we need to identify any captions or identify any accounts which are of high risk and accordingly plan our audit procedures around it. Apart from these three, what I have mentioned, there could be other areas as well which needs specific attention, which can be which can be highlighted through the discussions with the management. We can see prior year's auditors report and so on. And the last one, identify complex transactions during the year and related party transactions. Fourth one, now since we have already first of all understood the scope of the audit, and then we have identified whether the controls are there and if they are operating properly. Now in the third step, we will design our audit responses based on the first three steps. So in case if the audit controls are operating effectively, if the controls are operating effectively, in that scenario our audit approach would be comparatively less. We will be putting comparatively less audit procedures, but in case if the controls are not operating properly, then we need to do in more audit steps to gain better comfort over that account. So how do we design the audit response? So based on the risk, develop an audit strategy, which would be a mix of substantive and analytical procedures. The second one, decide nature and timing of testing, whether we need to do interim testing, whether we need to do quarterly testing or a monthly testing, how many times we need to perform the physical count for an inventory, and so on. And at the last, we need to obtain audit evidence to corroborate the approach and get comfort over the accounts. This includes inspecting, observing, and documenting the necessary audit data that has been provided to us by the management. Second is substantive procedures. Substantive procedures are usually applied on accounts which are significant accounts. Analytical procedures and other procedures can be alternately performed to gain better comfort. And the last one, data analytics procedure. So now coming to section 4, practical issues while auditing the healthcare clients. So what are the practical issues that we usually see? First, obligations to regulators. Being a healthcare industry which is highly dominated by the regulators because the life of a patient is at stake in most of the scenarios, or there may be small ailments for which there could be no wrong treatment. I guess healthcare industry is highly regulated by laws and regulations, and there are multiple compliances that are over there which needs to be fulfilled and reported to. Second, operation management agreements and Ind AS 110 control evaluation. The second thing what we need to focus upon is probably the industry usually faces challenges in terms of consolidation. Let's say there's a main branch, right, of a hospital which is out there in another city or another country, and there are other branches. So whether the consolidation had been happening properly. The third is referral cost. This needs to be again very crucially checked because because this is usually impermissible that there are any incentives given to the doctors or any clinics for promoting the clients, which is the or the customers. The fourth is inventory verification. Again, inventory verification is a very tedious task or difficult task considering the healthcare industry, because there could be for major equipments it could be done very easily, but when we talk about smaller consumables, it may be a very tedious task. So that also needs to be focused upon as to how we will be getting adequate comfort in terms of all those nominal value items. Trust arrangements and structuring. There could be different trust arrangements just to manage the books of accounts, getting grants from the government. So this also needs to be very crucially checked whether the how the trust has been structured, and there are no such uh, uh, unethical things that are going behind the entity. Non-paying and non-conforming trade receivables. Again, this is a very challenging area. Usually, what we do as an audit procedures or how we can gain comfort over the same is through subsequent period collections, or basically probably seeing the past year trends, how the that particular AR had been behaving in the past. Through that way, we can gain comfort over the same. The last, low value bills and high volume of revenue bills. So again, over here we can probably apply a mix of approach, both including substantive and analytical procedures. Again, we have already discussed that first of all we need to identify different streams of revenue, ensure that they are all complete. Probably we can do sampling from all those streams basis the kind of after the stratification, and once after the sampling we can also perform analytical procedures to see if there are any deviations from the prior year expectations. So now the main thing over here is materiality. Again, it depends upon how complex and how big the engagement is. When we talk about initially about the size of the engagement, that really impacts the materiality. So what are the critical factors that we see while determining the materiality in healthcare? So when we talk about materiality as a concept, materiality is a benchmark through which auditor determines whether we have to put how much efforts needs to be put in a particular account in terms of auditing it, right? So this was a very basic and generic statement to understand how what materiality is. So what is a benchmark for materiality? Benchmark usually for materiality is where the focus of all the stakeholders is. So when we talk about healthcare sector, the usual focus of all the stakeholders in case of hospital industry, healthcare industry is revenue. So what one would find is majority of the entities would be taking, auditors in case of healthcare sector would be taking revenue as a benchmark, and the range could vary from 1% to 2% and so on. Again, how does this range vary? This varies depending upon the kind of risk involved. So appropriate benchmark is something identifying the financial statement users in healthcare. Majorly we see revenue is considered as the appropriate benchmark, as the users are typically concerned about the cash flow and overall profitability of the entity. Level of benchmark, there is although no specific rule or standard, as we already discussed. Judgments about materiality are made in the light or surrounding circumstances and are affected by the size or nature of engagement, misstatement, or a combination of both. Judgments about materiality involve both qualitative factor and quantitative considerations. Again, we discussed this already, that usually the benchmark ranges between 1 to 3%, and considering risk, this may move on a upper side or a lower side. Usually performance materiality is kept between 50 to 75%, and again there it might change basis again the background. Trivial amount is usually kept between 5 to 10% of the planning materiality, and accordingly we do the documentation how we have taken the materiality. So why materiality is so important over here? So materiality is important, reason being, basis this we'll be deciding what accounts are we auditing in detail, are going to audit in detail, and what are the accounts that are we going to audit, and we are going to put less emphasis while auditing, right? So this is how materiality in all helps us in auditing. And for healthcare sector, this usually helps us in understanding the kind of accounts that we specifically needs to focus upon. There might be a scenario where there is an external regulatory requirement for auditing a particular account as well, or there might be observation that has came into the compliance reports of the regulator as well. Again, that account will be material from the audit perspective. So in general, materiality helps us in identifying the accounts that we need to audit upon. And for healthcare, I guess we have already discussed that apart from those three accounts, those two accounts, AR and revenue, depending upon the prior year experiences of the auditor, material accounts can also be identified apart from in general. So now, when we talk about now, we are coming to some of the cases where the accreditations or probably the registrations are required by the healthcare sector or entities. So this will be taken up by the Ruchi, and probably we can take up the queries post that. Ruchi, over to you now.
Thanks, Lavnish. And I think very detailed details on how to cover the audit aspects for from a healthcare perspective. I think that's a good understanding, and I'm sure all our participants would have gained a lot. One thing just I'd like to add in again, based on our personal stuff, and as you said, from an auditor perspective, what's important is because you are auditing, any of the auditor who's auditing, and especially in a healthcare, those financials can be referred further by any of your service providers. So, for example, in a healthcare hospital, the accounts could be required by the government agencies also, because if they are paying you back for the grants, they may want to see your financials and say whether they've charged correctly. And if we are giving a certification on the revenue, that we are comfortable with the revenue, which means that our data, if it's audited, we are liable to the other entities, other organizations also who are supporting the whole business. So I think hence it is very, very important for us to understand as auditor the role that we play, and hence the materiality also has to be ascertained to keep in mind the comfort that we're giving other entities because of the audit that we're doing on the financial statements. Okay, so I think we've really covered the financial aspects in too much of a detail, and I'm sure that's helpful. The other thing that we would like to add and tell our participants today is that nowadays things are beyond financial statements, right? When an auditor is really looking at a company or when he's certifying the financials, he or she is expected to go beyond only the financial numbers, because the financial numbers are linked with a lot of other things. And today we're going to talk about such more aspects. One is about ESG audits, or in hospitals, actually, the ESG concept came later. Initially, the whole thing started in the healthcare industry with health and safety audits. Because for a hospital or a healthcare service provider, health and safety was a very key aspect. And when I say health and safety, it's more including aspects of cases of fire, as an example, fire management, disaster management, whether it is regarding your waste management, as an example, because biomedical waste is one of the most hazardous aspects that impacts people. So people who may not be really patients, but they are staying near the hospitals, and if the waste is not well managed, then it impacts or makes healthy people also patients for the hospitals, right? And that is why the whole concept of health and safety was introduced in, and every hospital was made liable to be owning for the biomedical waste that is being generated. You in the hospitals, when you go, you would see different types of waste bags. Like you would see red, yellow, blue, black, green, and every waste bag has a different reason. So some only have to have like needles as a thing to be exposed. So various other things which are there, and these are very critical because there are a lot of governmental agencies which are auditing these hospitals and having penalties on the hospitals if they are not well managed. Right. So as an auditor, it is important for you when you are doing your audits to also see whether the health and safety audits have been timely managed, have been conducted, whether there have been any challenges or penalties raised by those organizations on the hospital. What is the hospital's action back on those non-compliances which have been raised by those audit standards? And now, as we're moving on from health and safety as an example to ESG, especially for all listed entities in today's time, reporting as part of the ESG or environment safety and governance is very, very important, right? It is mandatory by SEBI for all the listed companies beyond a specific threshold to submit their ESG reports. But individually also, the hospitals are taking a lot of efforts to do actions around environment, social, and governance, right? And hence, it is important for us to check on all those parameters and see whether that's going to impact any of our financial aspects, whether it's the revenue, whether it's the cost that's increased to us, or any other aspects that may have a financial impact to us, right? Because if you're having a water treatment plant to be installed, then again, it is an expense and a capitalization that you may want on your books of accounts, as an example. So you can see the linkages between the financial aspects and the non-financial aspects that are key here, right? Your carbon emissions, right? It could be one of the reasons that you may have a challenge, but because of which you may also be gaining some good aspects, because you may be, and I'm sure I'm just digressing a bit, but just to say that, the SDGs, which or the 17 social, UN SDGs that have been defined have to be complied by the organizations which are listed and have to report on them, which are the ESG parameters. So that's a something additional aspect. And again, if I have to say, it is also an opportunity as a CA that you can also get into ESG reportings for your own client, which is into healthcare. So that's one aspect. The other aspect is about the quality standards and the NABH or the NABL accreditations. So NABH is for hospital providers, and NABL, as an example, is for diagnostics and laboratories, as an example. So there are two different accreditations. These accreditations are given based on the size of your establishment, based on the parameters. And again, if you are an accredited organization or a healthcare provider, there is a parameter or a rate that you can define and you can charge because you are accredited, right? And this accreditation has a time bar, right? It is not that once you got your accreditation, which means that it is a lifetime accreditation. This accreditation lasts for 3 to 5 years and has an annual audit that happens by the Quality Council of India and the board. So it is important that you check whether these standards or these audits have been performed, whether these audits are kind of indicating any malpractices or bad practices that are being followed by the management, which can really give you a trigger or an aspect within your risk management. So, as part of your risk assessment that you do, these are some of the additional informations which will help you understand, what could be a probable risk, what could be your scope. Is there a requirement to go deep dive into some of the additional areas, as an example? It could also give you an indication in terms of the quality and the behavior or pattern. It could also give you an idea of the pattern of expenses that are being charged, right? Or the revenue charges that you are doing, or the pricing that you're doing. It could be that you're pricing higher as compared to what NABH is really allowed you to. And if you had not kept that in mind, and if that gets under the audit, then you could be in the scanner for the report that is given. So, these are some of the non-financial aspects, but definitely, as we all know, non-financial aspects also have a financial element, right? And when we do a risk assessment, we don't only look at the financial aspect, but we also look at the reputational impact and the customer impact, right? Because end of the day, a reputational impact will also have a financial impact in some way or the other. So these are some of the additional aspects that it's important for an auditor to understand and also to know, so that your overall audit scope, your audit approach, your plan, and the depth of coverage that you do is something that you can kind of take care of. And hence, it's important that when you are kind of investigating or you're kind of having conversations and just gathering knowledge and information about the kind of work that you're going with all of your auditees, then it's important that you kind of keep your ears and eyes open to all such non-financial aspects also, and look at such things which will help you. Because I think this is a very common practices that we've seen in smaller cities, as an example. Their accreditations would be over, or they've not renewed their accreditations, but they're still displaying their accreditation, or they're still displaying the charges which are based on the accreditation, but they are not really allowed to charge that kind of an amount, which means inflated revenue, which means our investigation needs to be deeper into certifying the revenue that we are kind of showing for that. So this is, a high level of our, insights between Lavnish and me around the audit considerations that you all need to do while keeping in mind the healthcare segment. And I think we would be open for any questions that you may have. Back to, Anilji, Nitin, and Prachi, the
Thank you,
moderator
ma'am.
questions.
Thank you, ma'am, for such a detailed and wonderful deliberation. Now we have received certain questions. So I request Nitin ji and Prachi madam to please start the proceedings of this question answer session. Over to you, Nitin ji, please.
Yeah. Hi, Lavneesh and Ruchiji. It was a very comprehensive session, but we have some questions regarding the deliberation that you have put in. So one of the question is that how to account for the doctor referrals, the cut that is been paid, because generally the collection from the patient is gross and certain percentages shared with the referral doctor. So how to account for it, or if is it even allowed to book such expenses in the books of accounts?
Sure, Nitin. So usually these kind of referrals are not allowed in the first instance, and secondly, these would not come with the same name prima facie. So usually, as Ruchi mentioned, that we need to dig in deeper for the kind of contracts that we have with the multiple personals. So we need to see whether those, if any money is diverted in the form of these referrals or mementos or any kind of gifts to all these doctors. This is how what we need to look at to ensure whether any kind of referral fee in form of any concentration is going to the individuals. So they would never be in the direct form.
Okay, nice. Another question reads that mostly these hospitals use technology and there are less printouts. So is there any specific procedures for audit of such infotech accounts? And does materiality have any relevance in such cases?
So as we are already moving to the, a phase where we are doing paperless auditing, and JE testing is another example where we extract all the data from the client and then probably process it and then share the results, or probably do the or perform the auditing procedures. So I guess it doesn't have any impact in terms of determining the materiality as a materiality for the audit, and in terms of even performing the audit procedures.
So another question is that why estimation is used in the revenue in hospitals generally?
Sure.
Love
Yeah, if you
The
want to take it.
estimation is just a way to give an idea in terms of what's the probable. So is there a chance that you are faking in terms of your revenue, or you're increasing or inflating or deflating your revenue by any chance? And hence that estimation is just a tool for an auditor to know and assess. And I'm sure this happens not only in healthcare, but even in other industries like manufacturing, to know whether, is the revenue being rightly claimed by the organization or the hospital.
Yeah, and to add on, probably I can quote another example how this impacts the revenue and AR. I'll just take a hypothetical example over here. So let's say a patient goes to a hospital to get some charges done, who is insured, right? So let's say his billing is suppose $2,000 basis multiple things that he has got done. For example, consultation fee, registration charges, and X-rays and MRIs and so on. So I'm just taking a hypothetical example. Let's say 10,000 was my billing amount. Since the customer is now insured with the insurer, definitely he would not pay whatever the arrangements are. Let's say the customer, the client, the patient would be paying 5% or 10%. The rest 90% would be recovered for the from the insurer. The hospital will release the patient after getting all the formalities done and collecting only that 5 to 10%. So out of those $10,000, I have only recovered 5,000 or 500 or 1,000 at my end. The hospital has only recovered that amount. Now, when we talk about the balance 9,000, which is standing in my AR, and parallelly I have recorded a revenue of 10,000, right? But at the end of the year, when I talk about that particular insurer, the insurer is never gonna pay me 9,000 rupees, 9,000 bucks, right? They are gonna deduct for certain amounts, right? For that certain adjustment, that adjustment is basically the net revenue that I need to book it at the year end. The adjustment is again an estimate, because today I cannot uh, compute what would be that adjustment. That adjustment percentage comes from a past experience with that insurer. For example, let's say I'm working with insurer A. I'm working with, there are 5 insurers working with me or tied up with the hospital A, B, C, and D, and E. So all those 5 different insurers can have a different realization amounts for that same 10,000 bucks that I'm booking as a revenue. Some might release me 95%, some might release me 80%, some might release me 70%. So basis the past trend, I have to apply that recoverability percentage to my revenue and my AR at the year end to recognize the fair value of revenue, which we are doing in today's scenario. So ideally, we need to recognize the net revenue and not the gross revenue. So initially, we'll record a revenue of 10,000 bucks, but at the year end, we need to actualize the revenue basis that adjustment that we'll be doing as an auditor. So this is how estimates work in revenue and AR.
Right. So another question is that since there are too many beyond financial statement things that we have to check, so what is the relevance of management representation letter and how should it be framed by the management so that we don't have to go into details of such licensing, etc. That is beyond our curriculum or the major things that we check.
Okay.
So management
So
representation letter or sorry, yeah, Lavnish, go ahead.
no, please take it, please.
I was just saying that the management letter has to be all composite and it has to include all areas, as we all know. And hence, it is important that when the management representation letter is received, whether it is also like, or I'm sure there's another aspect that which every auditor considers is about the board meeting MOMs or the meeting minutes that give you an idea in terms of what the management is representing and how the board has been aware. So I think those aspects will automatically get covered. And as an auditor, you need to see that whether all these aspects, which is we've just mentioned health and safety and any accreditations, but if there are any kind of for example, any purchases that you've done or any acquisitions that have been happening. So those are also part of the management letters that will have to be there. So it will depend on how the year has gone by for the for the hospital, and that's what you will have to, as a auditor, ensure that those are part of your management representation. Lavnish, anything that you would like to add?
Yeah, probably just one more thing. I mean, I guess you covered almost everything, but probably for larger entities, news is someplace where you can be really be updated, and probably all those regulations come from the regulators, right? And these are usually posted in all these media websites. So that is where one needs to be really updated, and that not only specifically goes for healthcare industry, but I guess that goes on for every industry, that one needs to be aware about of the recent scenarios and phenomena and laws and regulations that come out, because that is something that has the biggest impact and usually are found as non-compliant by any industry. So that is one place one needs to focus upon.
One of the question is relating to GST, I guess, a bit. It says that in this industry there is a mix of taxable and exempt services, right? So some of the things are taxable, for example, pharmacy, etc., and healthcare is exempted. So how important it is that the cost centers and the segmentation of each department is done in the accounts to make sure that the right input is taken and no, overlapping of inputs is not done in exempt from exempt to taxable. Do we need to check this in our audit as well?
Sure. So when we talk about the GST part, when we were presenting that presentation, one thing was heavily focused was that we need to segregate first of all the captions or probably the processes as well as into the streams, right, and the departments. So when we talk about the applicable rates of GST for different, even if I talk about the IPD, if I talk about the pharmacy, the rates of GST might be different, the mode may be different, consultation charges might be exempt, but in case if it is through a clinic, it might be different. So again, when we talk about entities at large, there are departments, and again, departmental billings usually happen, and those are consolidated at the accounts side, right? So it's more like a to concise it, it's more like a restaurant where you go where the price list is already fixed and the GST rates are already embedded into the system. So you just have to select the service, the kind of I mean, unless it is an emergency service, that is covered separately. But if it is a particular kind of the service, let's say gynecology or let's say pediatrician or any kind of service, so the rates are already decided at the inception and the GST are accordingly put it into the system and they are picked up. So it's not like that every service would be having a different kind of GST charge over it. It might depend upon the kind of nature of service rather. So if it is a consultancy service, it might not include it, but if it is medicines, as you said, that it would be included in it. So whenever the invoicing is done, it is accordingly structured and framed. So there are already so many things in the I mean, there are past precedents, there are examples to be taken care from another industry of the same sector or probably another entity that could be taken.
So there's one more question that I have. It's that in most of the cases, the revenue comes from cash or UPI transactions. So at the end of the year, if we have a cumulative balance, it's like in UPI, Google Pay, or some wallets, etc. So do we need to reverse that revenue as a whole, considering that it's not received, or there's some other treatment that should be done?
I'm sorry, I did not get the question, but if I'm getting it correctly, from my understanding, if the payment has already been received to a wallet, it is as equivalent to receiving that money in the bank. How is it different?
No, the question is that if the entry is booked as revenue, Google Pay to sales, but that amount is not realized in the bank because that entry might be wrong or revenue is overstated, considering that. So what should be the treatment, that it should be reversed, or after balance sheet items should be checked for considerable period to reconcile that entire thing?
So I'll take an example over here. When we talk about Google Pay or probably Phone Pay or Paytm or any of the online platform, these are payment merchants. These are gateways. These are not bank accounts, right? So whenever we are using these any kind of payment modes, the money ultimately gets transferred to the bank account itself. So ideally, the entry would be bank account to revenue, and it would not be to Google Pay to revenue. The second entry could be, let's say I'm an insured patient, right? I'm going through an insurer. In that scenario, it could be, let's say max, I'm just taking an example for over here, max Coupa, let's say 8,000 rupees, cash collected 2,000, which I have received from Google Pay, and the to revenue, that could be 10,000. So for 10,000, 2,000 I have received through Google Pay, but again it went into my bank account, and for the rest I'm debiting my AR because that would be coming in from that insurer, right? So that could be the second entry. Otherwise, there would be no such entry where GPay or any of these payment merchants would be payment gateways would be debited.
Yeah, so Nitin,
Okay.
just to add here, what Lavnish said is right, because these are like instant cash. It is just a way of getting cash. So somebody who does not have physical cash is using a wallet for payment, right? And even if I've received the money on 31st of March, it is money in my bank. That's my bank reconciliation has to confirm that this money is received, and then it is actual money received. It is a cash sale, as an example, whether it is a cash sale for pharmacy, whether it's a cash sale for the services provided for an IPD or an OPD patient or whatever, or the surgery that's done, like any kind of it is a cash sale. So there can't be an outstanding on this. Those are the instant deposits, what I'm saying. So, and it would go to the hospital's bank account only. It will not go to the employee's account. And hence that reconciliation is important, and there will never be like an AR out of this, is what I mean.
So now I'll invite CA Prachi to ask few questions that she has. Thank you.
Thank you, Nitin. Thank you, CA Richie and CA Lavnish, for sharing your valuable insights on the topic. So, we have a couple of questions related to the session. The first one is, can we net off the commission paid to doctors against charges received from patients?
No, these are two different things. You cannot net off all the expenses to the revenue, otherwise the P&L would be zero.
That is why you have different heads for each of the accounting. That's how the accounting system works.
So just to clarify on the doubt, I guess the question was not framed properly. So fair valuation works in a model where we try to estimate the actual realization for the top line. So we don't net off the what do we say, actual charges from the revenue. So it's like netting off trade discount from revenue and not the cash discount. So cash discount is a different concept. Trade discount, we initially expected that this would never be recovered. That's the reason we previously, when we were working with the AS, we were showing it separately as a cost item. But when we move to the Ind AS, where we are talking about fair valuation, we do show cash discount, but we don't show trade discount. We rather knock it off with the revenue. So this is, I guess, what the question, probably the query was.
I'll just like to add that generally, I guess our audience and participants are having audit of clinics, not hospitals, and this is something that is very prevalent in clinics. And this is because they don't have the computerized system, and that's how they practice, which is not fine. And with the auditor knows that this happens, but there's no concrete thing that he can do, or the changes he can make it out of it.
Right.
Okay. So, another question is, what specific audit procedures can be performed to verify and confirm unbilled revenue, and how to ensure its completeness in the books of accounts?
Okay. So usually in case of unbilled revenue, that would mostly be found out in case of insurers, right? Again, so that happens in case of insurers where you have provided the services but not have billed to the insurer, because what usually hospitals do is they collect particular let's say 200 transactions or 2000 transactions happened in a day, so they don't bill every individual single transaction or raise it to the insurer portal. They do it in batches, right? So there might be a scenario where there are some transactions on the last day, or probably 2 days, depending upon the internal process and policies of the hospital, that they have not billed to the insurer. So those would be standing in, first of all, your unbilled revenue account. And I'm sorry, what was the second query post that?
How to ensure the completeness of unbilled revenue as of the reporting date?
So we can usually apply two modes. First of all, we can see we need to perform a cutoff in terms of the last transaction that has happened with the hospital, and we can take a screenshot from the insurer portal that how many transactions, because every invoice or probably every transaction that has happened has a batch number. So from the last batch number till the ones those have been already been uploaded to the insurer portal, the difference ideally should stand in your unbilled revenue. And the second mode could be usually what we do is we perform analytical procedures and see how much it was in the previous year and how much it is in current year. We try to balance it out with the expectations for current year. Let's say if it was an X amount in previous year, and giving it an impact for current year estimates, it ideally should have been Y amount, and if it is somewhere near about Y amount for the current year, it is fine. So these are multiple approaches we can adopt.
And the other example I'd like to say is also, Lavnish has just taken an example of insurers, but the other example could also be all your governmental schemes, like say Ayushman Bharat, PMJ, or your other ESI, CPHS. These are also unbilled revenues that you can have. And you would have a similar kind of an approach that you would do, because again, you don't bill all your, associates or all of them on every day, as an example. So you would have a timing difference. And I think that process confirmation will also give you an idea in terms of completeness. So for example, if if the hospital follows a process of fortnightly billing to like say PMJ or a monthly. So you would know that last 15 days kind of patients or all of these are the ones that need to go to them. And that will help you ensure the completeness.
Okay. Another question is there any difference in audit approach to be followed for public and private sector healthcare?
Holistically, if I have to say, fundamentally, it is the same process. Again, based on the balance sheet size, criticality of the account which is there, your detailed approach of investigation can differ based on the type of accounts which are key from a balance sheet perspective. But as we say, standard approach or the fundamental approach remains the same.
Okay. Another question is, how can consumables in hospital inventory be checked for leakage?
So I can go here, and Lavnish, you can add if you want. See, as I think Lavnish also mentioned, it's important to first understand what is the management process of validating their inventory or counting their inventory. What frequency do they do? What is the kind of controls they have maintained? And what is the kind of report that you've got from your internal auditor, as an example, and how many cases of frauds or errors have been identified. So these are areas which will give you knowledge or an idea that is there really a leakage or not. Or also you could do an analysis, and the analytical procedure that you can follow is in terms of the consumptions. How are you seeing the consumptions of the consumables in each department? Is there spikes in any particular period? And then those spikes could be something that you can look at, that why was there a spike? Was this generally based on the increase in the patients at that period, or was it because of any kind of a fraud or a issue or a challenge that is there? But yes, definitely reliance or understanding management process is very important, and reviewing those documentations is also important.
Right. And to add on, I guess if we see the second side of the, like, probably the insurers also evaluate the same way. They are not gonna come and see every individual case, how much syringes or how much gloves or how many things were utilized for a particular case. They usually have a standard that if this is a billing amount, this is what usually the ideally consumables should have been consumed, and this is how much they release for the payment. This is what the standard is, and this is that from the past year's experience we try to see the current year deviations in case if there are any, and accordingly see if we need to investigate further.
And every surgery or every procedure has a defined percentage. So, if your total revenue, so the cost breakup normally. So if your revenue is 100 as an example, and you have a cost of 85 as an example, then that 85 would have a breakup of hospital of, like, say, rent is maybe say 10%, consumable could be 25%, doctor charges could be 100. So that idea you would normally understand when you see a lot of stuff, and that will give you an idea in terms of whether it is the right numbers, or are you seeing any changes?
The last question is, how do we check recovery from patients of food expenses paid to outside vendor?
Sorry, if this is being paid by the patient to the outside vendor and the hospital has nothing to do about it, then I think we don't have to check it as an auditor. I think the auditor will have to check only if it is going through auditor, the hospital books. So, for example, if hospital is charging the patient and a part of it is being, so for example, in a lot of hospitals, the billing is done as part of the your package, for example, and then the guy who's running the canteen gets a percentage or a fixed amount. So he may be paid based on the number of patients admitted in the hospital at that point in time. So, for example, for every patient who's admitted, say, in this class of a room, he may be paid 50 rupees per meal as an example. I'm just quoting example numbers. But what I mean to say, so that is something that you may have to check based on room rents. So the charge that the food vendor gets is based on the type of room that a patient is being staying. So you will have to see whether, if, for example, for a day, the food vendor is being paid, say, X amount. So there would be a calculation that in the deluxe room, there were so many patients. So then you can check that with the number of billings that you have, that whether deluxe rooms were really occupied that many or not. Or the other alternative, that deluxe rooms were empty, but you're still paying the food vendor, then there is a challenge, and then you may have to kind of counter. But otherwise, it's not. But yes, if if there's a Costa coffee which is opened up there, then the patient is directly paying to Costa, and the hospital only gets a rental for that area, and that's a fixed amount. That is irrespective whether Costa makes any sale or not. I hope that answers.
Yes, I would like to thank you both for answering the queries in a detailed manner, along with the inclusion of examples. I will now yield the floor to Anil sir for closing remarks. Over to you,
Prachi
sir.
ma'am, I hope you have received two more questions.
I am
Have you
just
received
checking.
two more questions, Prachi madam?
Sir, I'm checking. Yes, two questions are still there.
Madam,
So,
if you
how
permit, can we ask two more questions, Ruchi madam?
Yeah, sure, you can go ahead.
Please. Prachi ma'am, please go ahead for the next two questions.
okay. So, first is, how do auditors check that there are no bogus billings, especially in case where mediclaims are involved? What can be the specific audit procedures in this regard?
Let me go ahead.
Sure. So again, first of all, we need to see the past precedents if the hospital has been engaged in similar kind of scenarios. Secondly, what we can do is, for a particular transaction, when we do the walkthrough, we can do it in a detailed manner. The third one is we can perform unpredictability test, which we usually change year on year to see to include an audit procedure in our audit approach, which we have not performed in the past years. So to keep an element of surprise. So I'll take an example over here. So let's say I hired a vendor in the hospital for the security of the hospital, uh, for which I am paying a certain X amount. What I can do as an auditor is I can go and check the logbooks whether there's an attendance for that security guard at that point of time. I can, apart from checking the attendance at the accounts department, I can also go at the main gate and see whether there was an entry made by that security guard at that point of time, and at what time he is exiting. So again, how detailed one wants to get in is something that can be done. But again, it all depends upon the nature, timing, and cost of audit procedures, because this is a very crucial element, because we are auditors and we are not investigators. First of all, we have to keep that in mind, and in case if there is any kind of suspicion that arises, then definitely all these things needs to be done. So I guess this will answer the query.
Yeah, and I think, sorry, just to add, I would just like to say that, a lot of things have a connection. As an example, as we always said, so you can see the schedule, basically the patient schedules. You can see the occupancy rate of the hospital. You can see how many bills were generated. So if these are all areas which will give you whether there's been any fake billing or not. It can't be that your hospital was totally, and based on your discussion and understanding and the rush that you see in the hospital when you're yourself auditing will give you an idea whether the number of patients that is being shown, does that really logically make sense or not, So there is always, other than the financial data, there's always that sixth sense that prevails for every auditor, based on the discussion, conversation, inspection of data, that you can make a sense that how grave is the issue. Is this totally like, the billing is totally black, it is gray, or it is really white? So I think that perception is what you, as auditor, you have to make on it.
Yeah, and probably I can provide a realistic example from my past experience. So I was auditing an entity where they used to work in 3 shifts. At least they used to tell that they were working in 3 shifts. And when I was sitting with the accountant just gossiping, he was trying to prepare the MIS, and rather than showing additional depreciation for say 2 shifts or 3 shifts, at that place he was showing it as an what should I say, impairment. So we were just discussing about something. So this is how the skepticism work. You had to be curious about doing things. So this is how you do it.
Agreed. Prachi, the next question.
Yes. What points are need to be kept in mind while verifying the cost element for services provided under CSR? For example, free cataract treatment provided. How to treat the expenses and materials consumed for such services?
Can you repeat that? I'm sorry, I didn't get so big. CSR, you're saying that this is CSR services, right?
Yes. For example, free cataract treatment provided. How to treat the expenses and materials consumed in such a scenario?
So that will be our cost, which will go as part of the consumable. So here we'll not get revenue, right? Because it is a free service. But again, is this a free service which you're giving as part of the services which you will get billed from the government, as an example? Is it against any of the grants that you've got? It will depend on the nature of the issue, right? Lavnish, anything that you would like? So my understanding, again, my question, I was not very clear on the question, but what I understood, that's what I feel, that the cost will still be incurred by the company. Again, if it is a CSR is a totally different thing, which means that you have a separate CSR budget and you're going through the CSR budget. But if you're talking about no revenue service that you've given, then that's a totally different aspect.
I agree, and probably if maybe if I'm interpreting it right, the query is more regarding whether we should show it as a CSR expense or as a general expense, because anyways we need to recognize it as an expense. So if it is done under CSR, then definitely you need to show it. You need to actually reclassify it. Initially, you would be putting it under the expense, and then would be reclassifying it as a CSR expense. In terms of presentation, that could be one way, but ultimately it would be part of your cost, whether it be through routed through CSR or it would be through your expense COGS. So that those are the only two ways.
Thank you, Ruchi and Lavnish. I will now invite Anil sir for closing remarks. Over to you, sir.
Thank you so much, ma'am. Thank you so much, Ruchi, ma'am. Thank you so much, Lavneesh, sir. Apart from having busy schedule as well as engaging in one of the conference, physical conference, and you have given us complete 2 hours. Thank you so much on behalf of AASP of ICI for sparing your valuable time. And both of you have justified with the deliberation as well as with the this sector, as we have covered all aspects relating to this healthcare sector. So once again, on behalf of Auditing and Assurance Standard Board, I extend my heartiest thanks towards Lavnish ji and Ma'am Ruchi ji for sparing their valuable time, as well as enlighten all of us various intricacies of the auditing of healthcare sector. I also extend my heartiest thanks towards both the moderators of today's webinar, Madam Prachi ji and Nitin ji, for wonderful deliberating of this today's webinar. I also extend thanks to the participants of today's webinar. So I also request all the participants for the next webinar relating to the key consideration in audit of real estate sector, which we will organize on day after tomorrow, 20th at 4 p.m. So I request all of you to please join key consideration in audit of real estate sector on 20th June at 4 p.m. Thank you so much. Thank you so much,
Thank
everyone.
you. Thank
Thank you,
you.
ma'am. Thank you
Thank
so
you.
much.
Pleasure for us too. Thank you.
Thank you. Thank you.